Hey friends, Kevin Goehring here, your Sacramento Stockton area realtor and lender here with this week's weekly real estate report. Well, I think that I have good news for everyone. As strange as that may sound, usually you have good news for buyers, which is bad news for sellers, or good news for sellers, which is bad news for buyers. But let's take a look at the chart. Let me show you why I think we have good news for everybody. Well, starting with the fact that the green line here, available homes, continues to just hold still, which means that we're not getting any more homes on the market, which is good for sellers, but it's also good for buyers, and that we're not seeing a rapid decline. So we've got that. So inventory is holding steady. Pending home sales continue to hold steady. In fact, they're up a little bit, which is unusual for this time of year. Good for sellers. And then we take a look at the median sales price, which is not falling, holding steady. Good for sellers. It's not going up. Good for buyers, right? So it depends on how you want to look at it, but I think it's really good news all the way across the board. So why? Why is this happening? What does it mean? Well, as I've been saying, there's such a pent-up demand for homes. So many buyers out there who want a home that can't get a home. It's still a very, very hot market, especially sub about 500,000. Well, you get under 400,000 and forget it. I mean, it's just red hot down there. But those homes are few and far between, and usually significant fixers are pretty small. So a very nice 3-bedroom, 2-bath home priced in the $450,000 range is going to sell nearly immediately, provided that it's a decent home. It doesn't need a whole lot of work. So that's what's going to happen, is that as home prices may start to fall a little bit, more buyers are able to afford those homes. They're going to grab up those homes, which is then going to start push the price back up a little bit. Then the home buyers will kind of fall off, and then the prices will come back down. It'll do this up and down, I think for quite some time, I'm hoping. So what else is happening? Interesting in that lending guidelines are definitely easing up and getting less expensive, especially for investors. There used to be a quarter point or half point hit to the fee on rates for investors. Freddie Mac, Fannie Mae, they're pulling that back. So it's becoming cheaper for investors to purchase these homes. Now, what does that mean? Well, that could mean that more investors are going to enter the market looking to purchase a home. Why would they? Well, rents are still sky high. So that makes real estate a good investment. We're talking about inflation. Another good investment is real estate. So real estate continues to be a good investment for everybody. So you might see more money coming that way, sending prices up, or at least keeping them high rather than seeing this fall off that some people are predicting, another crash. Well, it may look like this for quite some time before we see a correction. Definitely hard to tell. If I could predict the future, I would probably be, doing something else. It's hard to say what a person can predict the future can do. So anyway, there we go. Talk about rates. Rates stayed really stagnant again. It's just hard to believe that. I don't have the numbers right here in front of me. 2.86, I believe it is. Freddie Mac is reporting with 0.7 of a point. Really just the same as it was last week and the week before, and the week before, and the week before. So rates holding very, very still. Prices are still looking good for homes. It's still a fantastic time to refinance. Now, while we're talking about refinancing, I will mention this. Again, listen to radio. Definitely some radio advertisements out there urging home buyers to do cash out refis, pull as much cash as you possibly can out, because as they say, the equity you have in your home is doing nothing for you. Now, that is true. It's not wrong, as I say, but I would take a different tact with my clients. And I would suggest that while it is possible to do a large cash out refinance, pull out as much equity as you can, reinvest that equity into something that's maybe making 10%, that would make sense, right? If you can make 10%, let's say in the market, and 10% is not hard right now, 10% in the market or better, and you borrowed money at, say, 2.5% or 3%, that makes sense. You're making a spread on that money and you're earning income. Here's a problem with that. What happens when the market changes and you lose that money and you're stuck with that payment? right? That's how we get into messes. So I'm more conservative when it comes to that. And I always say that it's important that you are secure in your home and have a place to live. And that payment should be as low as possible so that if something bad happens, you can always pull back all of your expenses, but at least you have a home to live in and can afford your payment, right? Let the cars go, let the boats go. Not the airplane, no. That's got to stay. So anyway, that's always my take on it. You know, you can do what you do with your money. There is some positives to the other strategy, but I think that negatives, at least in my opinion, outweigh that. So it's funny. One of the smartest question I've ever been asked by a client was simply, I presented all these loan options in front of them. It was back when we were doing pay option arms at 1% rate, which by the way, I always hated and always talked my clients out of. But the smartest client always looked at me and said, Kevin, what is it that you have? Tell me about your finances. Do you have a 30-year fixed rate or do you have one of these hybrid arms or something like that? You know, that's the smart person. They want to know what the people in the industry are doing and follow that. Smart people. By the way, I have a 30-year fixed rate mortgage. So there you have it. Anyway, hope you have a great weekend and I hope to see you guys here next week. Take care. Bye.